Well, good morning. It's Tom Aspray for the Viper Report, 11 a.m. Eastern. Thank you all for joining me. As is normally the case, we'll have this session hopefully last 30 to 45 minutes or so, and I will be answering questions throughout. I'm just posting a link in the chat area that's to the survey. I would appreciate it that you would take the survey either today after we finish the session or when I send the recording out, or at some point. I really look at these surveys and get your input. One of the top picks for a topic was the discussion of pivot point analysis. That's what I use to determine the topics, and so that's what we're talking about today. So once again, please take time to fill out that survey. We're going to be focusing mainly on the stock charts platform today. So it's important to understand what pivots are included in what data series. So that's the first thing I'd like to go through. So this is a weekly chart of the S&P 500, the SPX. And when you have a weekly chart in stock charts and you select pivots, remember that you select that down here, pivot points down here, then that defaults on a weekly chart to the yearly pivots. So I know at least half of you are probably going like, well, yearly pivots, what do I need those for? Why are those important, etc.? And, that's way too long term for me. One thing I realized very early on in the financial markets was that way too many people focused on the short term, and not enough people examined the longer term charts to see, to get a context for where the market was. And so that's why I've always, I look at the longer term charts first. I mean, my weekend scan, somebody asked me one of the topics, only one of you chose that, was weekend analysis. Well, I really look at the weekly charts if it's during the middle of the month, or the monthly charts at the end of the month as a starting point. Then I drill down, as it's commonly called, look at the weekly. If I'm looking for a new market, the weekly chart is what makes me select that market to examine further. Then, of course, I go down to the daily charts and sometimes even further than that. So that's the process that I use, and that's kind of the examples we're going to look at today kind of are based on the same process. So why is this interesting? So I pulled up the numbers here. Also important, let's bump up the scale a little bit here because I think it'll be important. You can see right here pivots. So they give you the pivot levels. There's a lot of valuable information as part of the chart. It's very small, so you may not be able to see it. If you flip your browser up to where it's 150%, you will be able to see it. But you can see that this is for 2018. The pivot was at 2537. The R1 was at 2830. The R2 was at 2987. Okay, and the S1, the support, was at 2380 and 2088. And those numbers, all this data, and of course the 20, in that case, week moving average at the end of the year was at 2692.15. So let's look at this a little more closely. So what happened early in 2018 in January? We got up above the R1. We had a high of 2872, which was above the 2830 level, this R1 here, but below the R2. The sharp drop we got into the start of February. A few people were saying this was the start of a bear market that Friday. Not I. Lots of reasons. The advanced decline line didn't suggest it was the start of a bear market, but also you can see that the low here of 2532 was just barely below, the yearly pivot at 2537. So it was just a pullback to the pivot. We were above the upper bands here for 3 or 4 weeks in a row, and then the 5th week before we reversed. So then if you look throughout that period of choppy pattern trading in the spring of 2018, we had a rally up to 2801, came out not too far away from the R1 at 2830, dropped back down in February to 2553, once again close to the pivot. And then, by the latter part of the year, we got up to 2940 in September. That was pretty close to the 29.87 R2 resistance, and then culminating at the end of the year, we got all the way down to 23.56 or whatever the low was, and it was just below the S1 support. So, those numbers are handy, particularly for investors, but they're also handy if you're looking to take a profit, or you're looking to establish a long position. Sometimes looking at these yearly pivots can be, pretty illuminating. Okay, somebody asked me what time had the 25.37 pivot level been established, and by whom? Just by mathematics, Kelly. There's a basic formula for the pivot levels. So basically, to review pivot points, so for the data for 2018 was all based on the data for 2017. So the very first day of 2018, you had these numbers, because it's based off the high, low, and close for the yearly for the year of 2017. So for every month, like we'll look at some monthly numbers in a second, the current monthly numbers in June are based off of May's price data, high, low, close. Weekly data, weekly pivot levels are based off the prior week's high, low, and close. So it's not arbitrary, it's strictly numbers, which is what the kind of stuff I like to use. It's not, it's a very, straightforward formula. If you want, email us at, Tom at Viper Report or something. I can send you, something like this, which is like a pivot calculator. So you put in it works in Excel, and you can see this is the breakdown of the formula. Put in the high, low, close, and it spits out numbers, for the pivot level and the resistance level. I've sent this out because people like to use it to calculate quarterly pivot levels, which is a topic for a whole nother presentation. But okay, so that's how the pivot levels are determined. So let's look at the daily chart. So we look at if you look at a daily chart, then you get monthly pivots. All right, so if you're looking at, I just happen to draw these as purple. If you're a paying client for there, you can see pivot levels, auto, purple. Okay, so make whatever color you want, but you can see that over time. So the solid line is the pivot for every month, and there's two levels below that. So first level is S1, second level S2, two levels above it, R1 and R2. So it's for a positive trend, you'd like to stay above the monthly pivot. You can see that the monthly pivots have been rising all this, April, May, until, in June, the pivot fell off. We got exceeded the R1, R2 level rather in April here before the market corrected. And, we got down, to, this S1 support here and S2 support in May before the market turned back around. So right now, once again, you look at these numbers. So, we're sitting right just above the R1 resistance level, 288.40. We closed at 280. 88.40 is the R1 resistance. We closed at 289.25. 301.53 is this R2 level. The pivot here is at 281.82. And then we have the S1 and S1 support level. So anytime you put in, a daily chart and you request the pivot levels, this is what you're going to see. So as we'll show in some discussions, when I see a combination of us hitting, if you're in the long market and you see a combination of where you've had nice run to the upside and you start to get into the R1 or the R2 level and you're up near the upper Stark bands or in these Keltner channels, then that's often a sign, well, okay, maybe I should take some profits in here. So the last type of pivot you have available is when you look at, an intraday chart, and that gives you the weekly pivots. Once again, so these are for last week, and they were based on the prior week's trading. So you have the pivot at 283.20 and R1 293.30 and S1 at 277.54. So that's important to pay attention to, and to be sure you know what levels are being examined. That's a key variable. And so if you I teach students, and they found it very successful, is to keep really good notes on what you're trading, why you're trading it, what your reason for getting in and for getting out, and also monitoring the market action, so that they're long a market, they write down what these pivot levels are. And particularly if they're a short-term trader, they can, you go into a market and you're long, and you say, well, okay, well, here's a reasonable target. If we're lucky to get up there, then I'm going to lock in an X number of percentage points in profit. Okay, that's worthwhile, and you watch that number. When I started out, you couldn't put alerts, but now every platform you trade off of, you can put in price alerts. And I advocate having open orders in the market, because as I was talking to a client not too long ago, we talked about a price level, and the market opened up, exceeded that price level by about 40 cents, but only in the first 20 minutes of trading. And then, by a little after 10 o'clock, it was, 50 cents to 75 cents below that level. And the only way you could have really captured that price was to have a resting order. And that's what I, advocate doing in terms of getting long and getting short the market. Other questions before we move on to some specific examples? Okay, let's look at, not that, let's look at a recent long recommendation. I think this is the right one. Yeah. Okay, so TransUnion was a stock recently recommended in the Viper hot stock service, and I like to, it came up my work because it formed a doji here. And then so I was looking for a close above this doji low, to, signal that, it completed a bottom. We might spend a class one time. Dojis are such like this, where the week ending May 13th, it opened at 64.57 and closed at 64.62. The open and close are very close together, and that's a sign of indecision. Sort of the buyers and sellers are in a tug of war. So then you look for a close above that doji high, in other words, 65.46, for a positive signal. Now, those signals are the most valid when you've had a market that's declined for a while, okay, for a buy signal, or one that it's risen for a while for a sell signal. So it brought it up to my radar, that the fact that it formed a doji, and then, it was, it started edging higher. It was higher the next week. And you can see that down below that, by the time I recommended it, which was, that was the Memorial Day weekend, the following Tuesday, was, that the weekly studies here, you can see the RS, remember the relative performance, it measures how True, that's TransUnion Company, was performing versus the S&P. So it crossed back above its moving average, indicating that, TRU was outperforming the S&P 500. Remember, the market was getting pretty well whacked right in here, but True was going higher, which is what you want to see. So, those of you who watch one of the, Bloomberg or CNBC, I recommend you keep the sound off oftentimes, but that's my preference. And the market is down, and particularly sharply. Look for those ones crossing the tape that are up. That often gives you a clue as to market leading. The on-balance volume, it dropped briefly below its moving average when that doji was formed, but the next week it popped back up, so that was a bullish signal. So everything was pretty much in gear for, to buy in TransUnion. We'd closed at 65.54. So then of course, once we look at the weekly chart, then we go to the daily chart at the same time period. Oops, no, let's see. So let's here we go. So this is the daily chart, showing the same close, 65.54. we had a spike up to 67.17. So this is that whole correction. So we had a high here of 71.92 down to 73.30 was, you can see, right near the S2. Okay, so that was the monthly pivot support in May, which held. And, percentage-wise, that's pretty good. So it's 8 points on a $71 stock. So that was a little over 10% correction. So that was a decent pullback. And so that's, you can see it as at the same time, the daily RS is also even looks stronger than the weekly. It's moved above its moving average and a clear uptrend. On-balance volume was not, it would be very strong when prices peaked here in earlier in April, but which is a bullish sign. So far, it's been pretty flat at that point. So it was not negative. The weekly was positive. So the weekly always in my work, is dominant. So let's if we look at so the recommendation here was to go 50% long at 65.28. We'd closed at 65.58. Remember, let's back up here. We'll go back to the old chart. And so right in here, just buying a little pullback here, because overall it looked fairly strong. And then if we 64.28, which was much better support. So how did I determine that support? Well, as some of you I've worked with will know, like if you take in stock charts, it's really nice to have all these numbers. So you can see 64.33, 64.56, all these sort of, numbers right in here, 64.28, was what I came up with. And that allowed me to use a stop under the 63.30 level, which is a pretty manageable, risk parameter. So that week after Memorial Day, we had did have a pretty good pullback, and hang on, let's see, through May 31st current. But we got down to 64.12 here. That was on the 3rd, the 4th. We turned higher. That was a good sign. And then the 5th and 6th, we accelerated the upside. It continued higher this week, so moved back above the monthly pivot for June, which is a positive sign, confirming we're on the right idea here. And now, exceeded the R1 and had a high of 71.41. So I'm looking to take off half the position, which is normally what I do right around, I think it's my level 71.58, so we didn't hit it yet. So I'll be watching if a trade works for me and I can get 10% on half of it in a week and a half, 2 weeks, I try to take it. Then I let the rest of it ride. The weekly chart, looks pretty good at this point. If we switch back and we look at the current weekly chart after this week, it looks like it's got some pretty good potential. 72.85 is the yearly pivot resistance, R1, but pretty bullish pattern overall. And look what the weekly indicators are looking, quite bullish. So it has the potential to get back to that high from the summer of 2018 at 79.20. That's that old high. So once I close out that other position, of course, I will raise the stop so that, worst case scenario, the stock collapse, then, I'll guarantee myself a profit. And so let's see. So let's see. So that's one example. How much does it cost per month to be a member of Stock Charts? Oh, Stock Chart. I don't get anything from them. I think the cheapest one is about $14, and the next level up is $23. You can do most of what I'm doing right here with the cheapest one. The main difference is they allow you only one list of things you're following, and if you go up to the next level, I'm sure there's some other differences. They allow you to have multiple lists. So I have lists for, ETF stocks I'm following, etc. And, That's it. They have a free trial too. So the free trial, you select what level you want, and they give you that for a month before you have to pay up. So they said there's no financial remuneration there for for me, but it's not a bad service. I'm using it more and more. It has some real handy things. One thing I find within my mentoring is that I can send, and if you become a member, you can like you can hit the share button, and then you just can share by Facebook, Twitter, LinkedIn, or email, and shoot a copy of that chart out to them. And if it's for my students, then if they open the chart and they're already online to stock charts, then they can import that chart into their stock charts, so they can have all the formula and everything that I used. So that's that's a couple of pluses. They have lots of features, and lots of, you can set up your own charts and own colors, etc. So it's pretty valuable. Okay, well, let's look at another example. Let's look at a recommendation from this week. So I've been watching Disney since it had this massive move to the upside on earnings. Didn't really want to chase it. I've been watching it through May. I kind of waited a little too long, frankly. I thought we might get below 130, back into this level, and but we didn't. And so last week we had a really strong surge. You can see it was up 4.5%. That was a sign that, okay, this little pullback, is over. We got from 142 down to 130.55. So that's 12 points. Not quite, probably 7-8% roughly pullback, so pretty decent. So I wanted to get long as of last weekend, and there's, I teach full courses on how to determine entry levels. Some of what I base on the weekly range. That's one factor. I also look at pivot levels, moving averages, Fibonacci support and resistance, etc. when relevant. So the range last week was pretty significant. It's from 38.76 to 31.49. So it was a range of a little over $7. So I thought that, okay, we're right up here. We should get some pullback. And if we got a 50% pullback, that would take you, down into the 64. So what my recommendation was 50% at 36.84 and 50% at 74.23. That was, and the rationale. So, the correction volume was really heavy on the breakout. You can see weekly volume had just dried up. That's a bullish sign. Okay, stock is developing a narrow range here, and then with the good higher close a week ago, the volume picks up. So the weekly RS here, on-balance volume, are both strong. They're both in clear uptrends, and that was a good sign. So if we look at the the daily chart, we can see what happened last week. So we closed at a high of 38.88 on the 10th, on Monday the 10th, and then corrected down. We got to a low of 34.82. So my second level was just missed, and then of course we accelerated the upside and closed the week at I think around 141.55. So that kind of completes this whole trading range. You can see the pivot levels, that you're watching here. So, the pivot for in May was, roughly 130. So we had 132.38, 130.55, 131.95, 130.78. All these areas I circled were right back into the pivot before we started to turn higher. And so we moved back above the pivot on the 4th with a high of 134.82. And interesting that, that high was the low from last week. So if I didn't pick that one up when I was making the recommendation. Otherwise, I probably had a recommendation at 35 something or just above that level, which would have been perfect. But we're still long. I'm looking to add to that position, and for that, I also use the hourly charts, and so you can see we don't have the numbers for yet for next week, but you can see like you know what the hourly might look, and you know, so here's where, you know, we came down between the weekly pivot and the weekly S1 support here, and then started to move higher, and you know, showing some good support around here on 38.88, which is the first really good support level. You know, and the intraday indicators are also positive. We've had a lot of dojis formed in here, so that could mean we'll get a pullback next week. Longer term, I think this one's moving, you know, quite a bit higher. Couple questions that, you know, do you use market or volume profile to help determine buy, sell, or money management levels? No, I do not. I know people who do, and, you know, it's, you know, I think it's a valid technique. I think it's, you know, the problem with it in, if you're looking at something, if you're trading the S&P or the, you know, the major ETFs, that the volume is very liquid, you'll get good, very good numbers. If you're trading a stock that is a little less, you know, like True Action, for example, TransUnion, TRU, you know, it's not going to. There's going to be a period of the day where it's not, the volume is not that clear. So that's, I think, one negative of it. Peter Stottle, a guy named Peter Stottlemyre, developed a market profile way back in the day, and I listened to some of his stuff, and I do have platforms that track that. And to me, it's just doesn't suit my eye well. That doesn't mean it can't use for you. I pretty much tell everyone I teach that, hey, I'm going to teach you how to use my indicators. You know, there's something I've worked on for years and do really work. But, you know, it doesn't mean you have to use those. And you know, I'm certainly possible that you're going to use some of my indicators and some of your indicators and come up with even a better method. That's always a possibility. Kevin, somebody wants to know with the HPI. I think you've written me before, Kevin. I think the only place you can find the HPI is in a paid service like TradeStation, Trade Navigator. They all have the HPI. Those of you who aren't familiar with it, it's a commodity tool. It uses price, volume, and open interest. About the only one that ever writes about it. Having had the pleasure of meeting John Herrick many years ago, and it's a very valuable indicator for the crude oil market and also for gold, but it's not readily available, and certainly not available in stock charts. I doubt they would ever add it, since I haven't even been able to convince them to use add Stark bands. So anyway, that's we're up to date, I think, on questions. We can look at gold here. Gold is kind of an interesting, you know, situation. You can see it. You know, we had, you know, the peak we had in February. You know, just exceeded the R1 resistance. We got up to, you know, 27.21, and then, you know, came back. You know, got all the way down to, you know, the S1 support in April, okay, and almost got back down there in May. That's, you know, I had a buy level. Actually, there was a day, I think it was this day right here, where we gapped lower. It was a Thursday, I think, and that's what's. But I, you know, part of my buy level was based on the fact that that was a pivot support level. And also, I was using a stop that I believe was under this stop back here, 118.57. So it was a really nice way to control the risk. You know, now that, you know, if you look at, we'll take this inspect thing off. You know, looks pretty bullish to me. It looks a little overextended. You know, you can see that, you know, yeah, we broke this downtrend here, so kind of completed, you know, a bullish triangle formation, depending on where you want to pull this in, you know, and so, you know, I guess last week I recommended selling. This chart is as of, frankly, as of through, what date is it? Yeah, through the 6th of June, which is when I advised traders to sell half their position. We were up near the R2. We were up above the daily bands up in here. I mean, at 126 on a 50 or 60 or something. And so I thought that that was a pretty nice run, and I thought we should get a setback here. So we sold out half of our position, you know, holding on to the other half. And let's save changes. Now we can look at, maybe let's change this to a current chart. So speaking of which, how do I do that, Dave? So if you're paid subscriber, you can see you can select the date range. So whatever approach you use to the market, I suggest you do the work necessary to convince yourself that it is a valid approach. That way, when it comes to putting your own money on the line, you'll have the confidence in it. So for this chart, I select a start date of November 13th of 2018, and end date of the 6th. So if we want to bring that up to current, then we'll just put an end date here at the 14th, hit update. We'll see what's going on now. Okay, so I was getting out in here. We're back right up to those high and above it. We had a little setback here down to 24.78. So it's been holding really firm. The volume was, the mark was actually down a fraction, so that's why the volume bar here is red on Friday. Daily indicators are still really strong. That might have been all the setback we're going to get, but oftentimes you see a more complex correction. So this is a market I'm watching. Also watching a bunch of gold stocks that I may write an article about next week for Forbes. So that's kind of my view on gold right now. Let's see, a question. When you go to a lower time frame, the pivots seen are the higher time frame pivots. When you had the weekly chart, you mentioned that those pivots are the yearly pivots. Yes, that was the case, and that's stock chart selection. I mean, you pretty much, in other platforms you can choose, that stock charts doesn't allow you to choose. So, as I said, weekly chart, they have the yearly pivots. So for all, they'll be the same pivot levels for all of 2018. And I actually wrote, if you probably Google yearly pivot price levels, I wrote an article, I think in 2017 or something, that showed that the yearly pivots for the major averages were really quite valuable, as it turned out. I mean, they hit the support and resistance levels pretty clearly. So daily charts, you get the monthly pivots, and intraday charts, whether it's hourly or 2 hour or 30 minutes, I believe, you get the weekly pivot levels. So that is how it works. Okay, so let's see. Let's one more thing on pivots here. Kind of an interesting. I was looking for a pullback in the utilities. Most people think, well, God, what? The utilities is not a trading vehicle. It's actually been a pretty good trading vehicle. We took some nice profits on it, and I was a little surprised. I thought we might get a little lower than this. You can see we came down close to the S1 here at the end of May. Rallied sharply up here, 61.19. So I was going, okay, well, if we get a pullback, I'd be a buyer, but I just wasn't fast enough. We got, right below the 20-day EMA right here, which is with a low of 58.94, almost made it to the pivot. So you can say, well, okay, it gives you an idea of what your risk might have been. Was probably under this 57.74 low, and we got back in last week, and it's looking pretty strong. And if we go up to, the weekly charts, let's see what they have to say for the outlook. And you can see the R2 on a yearly basis is at 62.20. Certainly a reasonable target up in here. And if you look back, in 2017, 54.40 was just above this yearly R2, and the low in 2018 is 45.45, was pretty close to the S1, the yearly support. So that it really takes time and takes effort, but once you start to feel what these numbers are, knowing where these pivot levels can be quite informative. So anyway, and the weekly technical studies on XLU still look pretty good. So I still like the long side here of the market. And if you look at, let's look at one other. Be interesting to see what the pivot levels are for. Everyone's focused on TNX, which is the in-year Treasury yield. Okay, so the S2, you can see down here is at 19, if you look back up at the pivots here, 1954, so a yield of 1.94, which would be below, you know, the, we are closed at 2.093 yield on a 10-year note, and the S1 here is at 1.954. So, another interesting. You can see that that pullback we had in 2017 was just right back to the pivot. So often you have a strong move up on a weekly chart, you get a pullback. You know, look at where that yearly pivot is. That's often a good level of support, you know, to take advantage of it. So pretty much that's all I have for everyone today. I'm going to put this link back in here. I hope you'll take take the survey. And you know, if anyone has any more questions, we're 35 minutes in, so I'm trying to keep to that 30 to 45 minute window. I think that's good for me, and I hope it's good for you. And do your stock and ETF service. How many alerts in each or per week? Yeah, the basic format for both publications is twice a week. They're pretty detailed reports, 46 pages in length generally. I don't always have alerts in between those updates. I mean, it's you know, it's not a daily service. You know, most daily services in the market charge, you know, $120 a month, and ours is $34.95. So that's part of the reason. If I see something dramatic happen, you know, that either confirms what I'm seeing or changes my outlook, then I usually put a market outlook update. I probably average, well, you know, 2018 for the first 4 or 5 months, I probably had about 2 or 3 a month at least, or, you know, 1 a week for quite a while. So they're when needed. For the stock service, I'm more likely to put a special update out if I see a really clear buying opportunity. And, you know, because the stock service is a little less dependent on my market outlook, so it's a little more frequent. All right, any other questions? Well, I guess not. Great, well, thank you for joining me, and hope you found it beneficial. And once again, please take the survey, and I'll probably produce this update here. I don't know how, I guess I can't ask for a series of hands, but I wonder how many of you have seen some of the earlier videos that that I've done. Yeah, if you're interested, you know, there's quite a bit of information. Let's see, where can I get you to there? So let's see if we go. You're on the Facebook page for Viper Hot Stocks. I just can't quite get you there. So, and they're also on YouTube. So, you know, if you go to either one of those, you have an opportunity to find those videos, and they'll fill in some of the blanks. And if you're just joining me for the first time, and you don't want to know how to set up my indicators, there's one specific video on that. It shows you how, you know, how I develop, you know, what all these numbers in the bottom here mean, you know, and how you can change them. Great. Well, have a nice weekend. I hope you enjoy Father's Day on Sunday, and we'll probably do another one in a couple weeks. Thanks.